If I look
Correct.
at the inflation rate, and officially we're at say 3%. If you look at where we've been for the last several decades, it's probably averaged about somewhere around 3, maybe 4. But more realistically, and everybody in their daily lives will tell you that they're not comfortable with those numbers. They don't feel that they represent what people actually have to deal with and live with. So if you project using inflation rates that are more realistic, again, you get a peak in silver much closer to about $300. So
Right.
I think I'm being quite reasonable. And I also say that to get to that peak, we're going to be in some kind of a mania phase. I'm not saying
Right.
silver's going to steadily to $300 and it's going to stay there or it's going to keep climbing. I'm saying, ultimate crazy FOMO mania, silver could easily reach 300.
Silver, often overshadowed by its more illustrious counterpart, gold, has languished in a prolonged consolidation phase, hesitant to breach its price thresholds. However, recent developments signal a shift in this narrative, as burgeoning demand and heightened prestige propel silver's price to break through multiple resistance levels, reaching $27.3 at press time. Drawing on historical data, particularly the gold-silver ratio and past silver prices relative to assets like real estate, PeterKrauth, publisher of the Silver Stock Investor newsletter, lays the groundwork for a compelling projection. Krauth posits that if historical ratios and trends persist, silver could soar to $300, an assertion rooted in meticulous analysis. Silver's allure as a hedge against inflation has garnered widespread acclaim, with proponents like Robert Kiyosaki, author of Rich Dad, Poor Dad, advocating its role as a steadfast safeguard amid economic uncertainties. Kiyosaki underscores silver and gold's resilience in combating inflationary pressures and sudden economic shifts, further bolstering silver's standing as a reliable asset class. In light of alternative inflation calculations suggesting higher rates than officially reported, Krauth indicates that silver prices may experience a surge in response to mounting inflationary pressures, presenting an enticing opportunity for investors attuned to market dynamics. The surge in retail demand for silver catalyzes its current price rush, fueled by its indispensable utility across various sectors, including jewelry, manufacturing, engineering, and healthcare. The Silver Institute forecasts a robust outlook for the metal, with demand anticipated to reach 1.2 billion ounces in 2024, underscoring its enduring relevance in diverse industries. However, Peter highlights potential disruptions looming in the silver market due to heightened demand for physical delivery. Large industrial consumers, reliant on silver for their operations, may need help securing adequate supplies amidst market constraints. This factor could exert additional pressure on prices and market dynamics. Come along as we explore the valuable insights provided by PeterKrauth. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Well, 300, I mean, I know it sounds sensational, but when I got to that number, what I did was I looked at what had happened to silver prices in the past, and I compared it to other assets, important assets, hard assets typically, or stock indices, for example, large indices. And so a couple of examples are, one of the probably your viewers understand and know the best is the gold silver ratio. So I said, okay, if I'm going to look at where silver could go ultimately, what has it done in the past? Well, in 1980, when gold peaked and silver peaked, the ratio fell to somewhere around 14 or 15. At the time, gold was $800, silver was about $50. And the ratio, as I say, was let's use 15. So I said, okay, if I look forward and I make my own projections, and I'm not the only one, by the way, and I detail this I provide lots of detail about this in the book, how I get to this, the fact that I'm not the only one. I believe some very, very, very smart, observers, researchers in the sector have forecasts for gold, and I went with 5,000. I think that's a realistic target. We're almost halfway there at this point, so I don't see 5,000 as the biggest stretch in this bull market. In any case, if you use a $5,000 gold target and you say 15 to 1, you're at $333 silver. So to me, not a stretch. If you use, and I think it's probably perhaps more realistic, ultimately, perhaps say we go to, and again, I'm not the only one, some very savvy, very accomplished, very well-respected analysts, it's all in the book, have reached $10,000 as a target for gold. And if you do perhaps say $10,000 and you use a more conservative gold silver ratio of say 30 instead of 15, you're still at $333 for silver. So that's the gold silver ratio. I think that you're going to have a big consumer of silver stand for delivery. I think these markets were not really meant for that, but this is, as I say, based on what I can tell, how a lot of the industrial users are actually getting some of their silver. This is where they're getting it. And all it takes is for one big consumer to go to the market, hold a long contract, say, okay, it's expired. Now I want my silver. And for the exchange to say, oops, sorry, we're out of silver. We're going to have to pay you out in cash. And they're going to say, no, I want the silver. I don't want the cash. And they'll say, sorry, force majeure, no more silver left. Here's the cash. And that consumer, that user of silver is going to scream, and we will hear about it.
PeterKrauth underscores the pivotal role of industrial demand, particularly from the burgeoning solar industry, as a driving force behind the silver market, highlighting the exponential expansion of solar capacity and the surging demand for silver in solar panel manufacturing. Krauth emphasizes the sector's transformative impact on silver consumption. The rapid growth in the solar industry has led to a substantial uptick in demand for silver, crucial for producing photovoltaic cells. Recent research projects a significant 21% shift in the global silver supply by 2023 to meet the escalating industrial requirements, with approximately one-third of the global silver supply, equivalent to about 300,000 ounces, now allocated for solar power applications alone. Beyond the solar sector, silver is extensively utilized in various other industrial applications, including automotive manufacturing, solder and brazing alloys, and water purification processes. Notably, the increasing adoption of electric vehicles has further propelled demand for silver, given its essential role in EV technology. EVs, requiring more silver than traditional gas-powered vehicles, contribute significantly to the industrial demand landscape. Let's get back to the interview.
My point is, on a very short-term basis, I think both gold, more gold actually, because gold is at all-time highs. But I do think both metals could be in for a really small correction. I'm really talking small amounts over the next sort of week or a couple of weeks, just because really has become a little sort of near-term frothy. Absolutely much more gold than silver. That would not surprise me. But yes, these are moves that could certainly be sustained. And I think that when it comes to manipulation, my view at least is that there is manipulation, and not just in these markets, and that tends to be kind of on a shorter term basis. The big players play with the markets, play with the price, benefit from it. In terms of a sort of a longer term managed kind of manipulation, that's where I honestly don't know a lot about the futures market, but also have a hard time understanding how that would be possible to sustain on an ongoing basis. I'm talking years and perhaps even decades. If you're looking at the silver market, really, if you're not paying attention to what's happening in solar in particular, then you're really missing, I would say, probably the biggest single driver other than investment demand, because solar has really become what I call sort of the 800-pound gorilla in the market. It went from few tens of millions of ounces maybe a decade ago to over 200 million ounces next year. That's what the forecast is. We were at nearly 190 or so million ounces in 2023. And so industrial has become more than half of the silver market in terms of demand. And solar represents something like 30% of just industrial. So solar at 200 million ounces is 20% of the entire silver market every year, which is roughly about 1 billion ounces. So you've got to watch what's happening in solar. And the fact is that solar capacity is being built out dramatically, led by the Chinese. About 80% of the market is China in terms of manufacturing. And solar demand, so sales of these panels, has also been beating forecasts dramatically. Now, if you take sort of I think, a reasonably even conservative view of solar, and you say to yourself, all right, so there's been all this capacity. What if there's some sort of recession, things slow down, and there's less demand for solar, and solar kind of plateaus, and building out of the solar economy and the solar sector starts to plateau? you are still going to get a lot of demand of silver in from the solar sector, just because we are transitioning to new technologies. So the, I guess, incumbent technology is what we would call PERC. Um, it's about half of manufacturing capacity right now. About 3 or 4 years ago, the next two technologies that, by the way, require from 50 to 150% more silver per panel. These were about 10% of manufacturing capacity. Last year, combined, they were already 35%. The Silver Institute thinks that the next generation, which is 50% more silver per panel, is going to already represent 50% of new manufacturing capacity this year alone. So even if we plateau in in solar manufacturing capacity, the fact is that we're moving to technologies that require more silver. So that is going to continue to feed the demand of silver from the solar industry.
Considering the multifaceted drivers of silver demand, including industrial applications such as solar panel manufacturing and automotive production, how might these factors shape the future supply-demand dynamics of the silver market? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.